President Goodluck Jonathan handed ownership of the bulk of the state's electricity companies to private buyers on Monday, completing one of the final stages of a privatization process that is in its first phase. ABN, right now I speak to Babatunde Obani, an investment banking analyst at UBA Capital, to analyze the implications of this move and other macroeconomic issues in Nigeria. Thank you so much, Tunde, for joining us. So this is clearly historic in Nigeria. If you're looking at how things have played out in Nigeria, the power sector has been one thing that a lot of people say needs to change for us to see that significant growth in the economy. So your thoughts about what next from here? It's a significant move to see that the government has handed over these assets now, but what's your take on what happens next?
All right. Good evening, Wale, and many thanks for having me this evening. Like you rightly said, that this is something that has been anticipated, and it's something that is expected to have positive impact on Nigerian economy at large. But taking it one step one after the other. The first one is that from the rate at which the economy has grown in the last couple of years, we've averaged 6–7%. But the truth is actually that if we have adequate power supply for businesses to thrive, for businesses to operate, there's capacity for us to grow at the double digits, say like 10% and the early teens. And I think that's what is going to bring on board for the business operators in the economy. So you're optimistic that we're going to meet some of these targets, and people talking about 10,000 megawatts by next year? Yes, although some people suggest that the transmission the transmission mechanism is still a bit weak and does not have the capacity to absorb even the new power that is coming on board. Well, we need to look at the reform roadmap, and we need to know that it's actually going to be in phases. And I think what the government has done has gone to demonstrate that the government has the will. In support of, is something to just keep saying we're going to do it. But with this action on Monday, it has demonstrated to the world that the government has the will to carry this forward. And looking at the kind of investment you require in the power sector, the estimate is about $3.5 billion yearly for the next 7–8 years for us to reach that 20,000 megawatt by 2020. And if you look at the capacity of the government does not have this capacity. But what this has done is to create an enabling atmosphere to have a partnership with the private sector wherein you can access the cash flow or the funds from also the private end of the market in combination with what the government is doing, and you can jointly fund the assets or the investment that we need in power sector. And this is going to translate to what the people have been yearning for us to have the adequate supply to power the economy, to support the growth drive of the economy, and this is what is going to happen. All right, Tunde, fingers crossed on this. Clearly it's a historic and important step in Nigeria's economic transformation. But let's talk a bit about what's going on elsewhere. The U.S. They're calling it a shutdown. It's entering its 4th day, the government shutdown. And we know that tapering is something around the corner. So I want to get your thoughts on what all these things mean for the economy going forward. Well, I think the major challenge that this will have on the Nigerian economy, it's if you look at what has happened since Monday, since the shutdown on the 30th of September, we've seen what has happened to the oil prices. Oil prices have actually gone down. And if this is not resolved between now and October the 17th, then it's going to spell doom for oil prices. And we all know that in the Nigerian economy, about 95% of government revenue, or less than 90% of government revenue, come from proceeds of oil, petrol dollars. So if this happens, then there is likely to be some, risk outlook to the revenue generation capacity of the government for the rest or for the foreseeable future. But that's also to quickly say that shouldn't be a major concern, because we know that we also have other, like we have the foreign reserve that we can also use to shore up the stock, the shocks that might come with this shortfall in oil prices. But it's also good to know that the risk to the outlook is one, there'll be a fall in oil prices, and also two is that there might be the tapering of the quantitative easing that has been in the news for about 2–3 months now. And if that happens, it is going to have an impact on the emerging markets. And of course, we know that we have foreign players in this market playing in both the bond market and the stock market. So that is also going to be a capital outflow, and that can also affect the returns that we've seen in the market thus far for